Hey everybody, what's going on? It is James here with Crypto Common Sense, aka Three Peaks Trading, and I'm wanting to sit down today and do a brain dump video because there's a lot of different topics that I want to cover, and so this will be wide ranging. I'll put timestamps down in the description so that you can jump around in case there's parts of the video that maybe you're not interested in, or worse parts that you're more interested in. So first things first, I want to talk about something that happened yesterday that's very frustrating for me. I get this article saying that a billionaire has said that Bitcoin will never go below 90,000 again. And before I even clicked on the article, I was pretty sure I knew who was saying this nonsense. Well, I had to guess. There was basically two names. It was either going to be Michael Saylor or it was going to be one of the Winklevoss twins. So I clicked on it. Of course, it was one of the Winklevoss twins. And I'm going to point a few things out. First off, I'm not an attorney. Okay, so let's make that very clear. I am not an attorney. But the U.S. law prohibits trying to manipulate markets, especially when you personally benefit. And this is a guy who owns a cryptocurrency exchange and has probably one of the largest supplies of Bitcoin in the world. So him saying things like this is the last time you'll ever be able to buy Bitcoin below 90,000, that is a very forward-looking statement. And it, like an average person can put an opinion out there and they're not going to be held accountable for it. But if that opinion influences the markets, then it actually crosses into some legal territories. So first off, I think he should be prosecuted, but I know he probably won't be because of connections of money and all that kind of stuff. But I wanted to do a video and talk about this because let me tell you guys something. This guy makes these posts and it 1.6 million views. How many people are following into Bitcoin or regretting selling their Bitcoin and all this nonsense over this post without realizing that he's made several of these posts over the years that have turned out to be completely wrong. And somebody else, I had seen a few of the comments, a few other people were calling him out. A lot of people were actually calling him out. Like this guy, look at this. This guy reposted a post that Cameron made last year in November, almost exactly a year ago today, saying, who's going to be the last person to buy under below 100K. This one I could say is not as illegal because he's saying who is going to be the last person. He's not saying it's going to happen. He can come back later and be like, oh, I didn't mean that was happening now, right? So he kind of lets himself an out. He left himself absolutely no out with this. He blatantly said this is the last time, a definitive statement. And so I'm going to tell you guys the same thing that I just posted on his thing earlier this morning. A mentor once told me, anytime someone claims they know that where price is going, they're either A, delusional, or B, trying to sell you something. Those are the only two options because nobody knows what the market's going to do. And in fact, if you look at my Twitter profile, what it actually says in there, it ain't what you don't know that gets you into trouble. It's what you know for sure that just ain't so. At least Robinhood has an actual prediction market. So if Robinhood came out and said something like this, or the CEO of Robinhood, and he was willing to take the other side of that trade, I'd have a lot more respect for that. And it kind of sucks because, public disclosure, I own Gemini stock. I don't think it, I think it's going to go lower potentially, but I still own a tiny bit of it because I was going to cost average into it because long term, crypto exchanges, I think they're here to stay, whether that's through different crypto trading or stable coins. I think they'll be around for a while. So I even own some of this company's stock, but this stuff right here is disgusting. Like trying to make people FOMO in. And I don't know if he's trying to create exit liquidity. I don't know if he just wants volume for Gemini because they charge these outrageous fees like almost all the U.S. exchanges do. I don't know what his game is, but I don't believe for 1 second that he deep down believes that this was going to be the last time Bitcoin ever fell under 90,000. I don't believe that not one part of me believes that he actually believes that. But with him and his money and connections, different set of rules for those 1%. So that was the first thing we'll talk about was please don't let him or anybody else convince you to buy or sell your cryptocurrency. The one thing that I regret about my Twitter experience more than anything else, there's basically three things that I really regret. First of all, I regret getting on there at all. I wish I had never got on Twitter. I was never on Twitter before crypto, and I wasn't on it in the early days. I got on it like heavier in like 2018. And I hate that I got on there because I allowed some bears to kind of influence me, my fault, not theirs, and make me more bearish than I should have been at different points. So that was one. But two, it's embarrassing to me, my behavior on Twitter. When I started out, I was just an upbeat, happy-go-lucky, happy to admit I didn't know much, but here's my take. And then I got a couple of calls right. And then because I was so contrarian, and I'm very contrarian, I started to get bitter, and I started to feel like I had to defend myself every time I turned around. And that's kind of toxic in itself. But I went back and looked over the last like 12 or 24 hours. I went back and looked at some of my early posts, and they were downright arrogant. And I mean arrogant, like cringeworthy. Like I was like, oh, that's terrible. And I never went as far as to say I knew what was going to happen, but I was definitely expressing some very strong opinions. And I was using language that basically, I felt like it belittled people who didn't agree with me. You know what I mean? Like I would use words like, it's just that simple, folks. Like, and look, even when I was right, it doesn't matter. That's so condescending. Like, and that really like, it gets at me like, wow. And like, you're a bit of a tool, you know, like it really, it's embarrassing to me. And I leave the post up because it's a matter of integrity, but also because it reminds me not to do that. Don't do that. Don't be condescending to people just because you had some success. You know, that's not okay. They always say that money just exposes who you really are. I think that's true, but it's not just money, right? Because I wasn't making a ton of money yet back then. It's like success sometimes goes to your head. And even going back to some of the religious texts and things, you know, pride is greatest before the fall. It really is. So don't be like this, and don't be like early me, like being super condescending. Always acknowledge the fact that you don't know what's going to happen, and that there's at least, I would say at any given time, there's at least a 25% chance you're wrong, no matter how right you think you are in the markets. Just period. Like always accept that you could very well be wrong, and take proper steps to mitigate that. So those are my big regrets, right? Like the biggest regret is being arrogant early on, and joining Twitter at all, and just like that toxicity that, you know, it's just not good. I did find this super interesting. I guess Grok, I didn't tell Grok I was talking about myself, but I asked Grok to analyze my handle on Twitter. Like I was on Twitter and there was a button you could click, and I was like, what's this? And it was kind of cool because other people who maybe hadn't seen me post or something, like if I was active on there, they could click on my handle and it would say, hey, this is, you know, his history and stuff. And so I was like, well, hey, tell me this guy's, you know, biggest strengths and biggest weaknesses. First of all, he gave me a compliment, stands head and shoulders above almost everyone else on CT. I take that, you know, as a huge compliment. Ruthless cycle awareness and willingness to be early, 100%. And deeply contrarian when the crowd is maximally wrong, 100%. I have never cared about fitting in, not in my entire life. Always marked to be my own drummer. Bit of an oddball, all those things, right? So this is just natural for me. And biggest weaknesses. I felt like really the biggest weakness is I had too much of a bearish bias. But I was talking about, this is not really accurate. It said that somehow my 52 to 75,000 call wasn't great because it hit 69. Yeah, that's right in the range. So Grok got confused on the map there. He kind of gigged me for saying, like earlier in 2025, I said it could top at 173K by November, which was this month. And of course, they only got to 126.5. So they're saying, well, I missed by 27%. I don't consider that a big weakness. I mean, I still feel like that's pretty good. And of course, back in October, I did videos adjusting that, saying that, you know, I thought we had entered distribution. I did a video on October 9th, like talking about basically how Bitcoin's overvalued. And I got one comment specifically that I still remember that was kind of like almost poking fun at that idea. Well, turns out October 9th was one of the best times in history to sell Bitcoin. It talks about my 2022 bottom, you know, me talking about 8 to 16,000 zone. I did. And how I was leaning more toward the downside. I was leaning more to 8 to 12,000 and a bottom of 15 to 6. So it kind of missed the weaknesses because my biggest weakness really is the bearishness, right? And then that's where the actual strength or the actual weakness is I was too bearish. I was always a little bit too skeptical of the markets. So next thing I want to talk about is I've seen several articles, and I do mean several articles, that point to this idea that quantum computing is going to break cryptography as it relates to several things, but also cryptocurrency. And I want to say, first of all, this is not new thinking. This is something that I've talked about many years ago, way before most people were thinking about it, because I'm a software developer. And so we learned about cryptography when I was learning to code, you know. So in 2016, I was taking coding boot camp. It was a 9-month boot camp. And that's where I went from being somebody that dabbled with code for like 20 years to somebody that actually learned proper, you know, software development and stuff. And we covered this topic of cryptography and things. And so I was always concerned about this possibility, and I was talking about it early on. And it was actually one of the key reasons that I felt like 69,000 back in 2021, that it may be the all-time end-all high. Like it may never go higher than that. That's, at the time, that's what it felt like. And one of the reasons was quantum computing, because I felt like, over the next several years, there would be advances made that would bring that closer to reality. And even if it didn't happen in the next 4 or 5 years, that it would scare people away from, cryptocurrency. So my timing was off, but now, of course, I've seen several articles this week from several different people, like cryptocurrency people, also like cybersecurity people, like venture capitalists talking about this. So I would say that it is a concern that you should be aware of and kind of keep in your, peripheral vision, if you will. But I also saw today Adam Back, who worked with the, like way back in the day on the Bitcoin Core stuff. He's basically, and I don't know this, I'm not this advanced. I'm not like a master's degree in computer science or anything like that. I'm just a, like, run of your mill software developer, more low level, mid-level developer type of guy. I'm not what I would call elite and by any stretch of the imagination. But basically what he's saying is there is a way for Bitcoin to implement new solutions that'll make it quantum resistant. So the reason I point this out is because my first thought is, yes, it's the reason for me to stay away from Bitcoin. But if this is true, then it may not even be that big of a deal. So you should do your own due diligence, like everything, like really make sure you're digging deep. I was reading a book recently that talked about human beings. We're about twice as likely to believe something when we read it as to disbelieve it, even if it's most likely false, right? I'm kind of butchering those numbers a little bit, but the general idea is this, is people, when they did experiments, they found out that even things that were obviously false, people would still believe them when they read them. And what we think happens is, like, as human beings, we assume that we read something, that we vet it, and then we choose to believe it. But what these experiments and scientists found out was what really happens is people read something, they believe it, and only later, if they get the inclination, did they go vet it to make sure it's accurate, which is a huge problem, right, in today's society with social media and everything. I think it's one of the huge reasons there's such a divide in the world, because people read stuff on social media that's not true, and then they tell their friend about it, and it spreads. And we have this insidious, these algorithms like reinforcing this as an echo chamber of falsehoods, regardless of your views. It doesn't matter. You were in an echo chamber on social media. So like if you're, super right-leaning in politics, you'll get super right-leaning content. If you're super left-leaning, you'll get left-leaning content. If you're super bullish, you'll get a lot of bullish content. If you're super bearish, you'll get a lot of bearish content. And it acts as confirmation bias. So it's super, super dangerous. And you want to make sure that you're purposely trying to always play devil's advocate to whatever theory you have. Like, this is one of the greatest strengths that I have, is like I'm gotten better and better the older I get, especially, and the more experience I get in life at playing devil's advocate. I keep seeing articles about these LLMs and how, like, they're leading people to, hurt themselves and all this stuff. I don't blame the LLM, because LLMs are basically designed in such a way that they tell you what you want to hear unless you instruct them otherwise. So when I use an LLM like a ChatGPT or an Anthropic, etc., Claude, I tell them specifically, A, to be brutally honest. That's a very common phrase I use, but be brutally honest. And B, I'm constantly saying play devil's advocates. When I go in with a theory on software, when I have a software idea, I go in and I ask AI, tear it apart, show me the security flaws. You're the world's best hacker. Hack my software. Where are the vulnerabilities at? If I go in with a theory, which I really don't use it for market stuff, but if I went in with a theory on Bitcoin and I was like super bullish or super bearish, what I would do is I would go in and I would ask AI to tear it apart. Show me the other side. Show me what I'm not seeing. That's the greatest strength to AI that most people aren't using, and they're just not even thinking about. Don't make AI your wingman that's patting you on the head and telling you how great you are. Make it someone that's going to hold you accountability. Make it your accountability partner. If you do that, you'll find out that those LLMs are worth their weight in gold. You have to do this stuff. You've got to challenge your own beliefs constantly, and especially in the markets, always challenge your belief, right? It's okay to have conviction. It's okay to think you have a handle on where things are going, but you've got to always prepare for the fact that you could be wrong. But let's get into some TA. So I'm seeing a bunch of articles over the last week. This is why Bitcoin dumped. No, that's why Bitcoin dumped. This is why Bitcoin dumped. It's a complete surprise. Guys, there's nothing surprising about this. And if you watch these videos, it's not surprising. Because again, on October 9th is when I shot that video talking about Bitcoin's value is basically overstated. And that was right here at $120,000+. I shot videos when we got down to this area saying, be careful of the bounce. It's probably a last point of supply bounce. This is probably distribution. We're probably entering, into phase D, and then we're going to enter into phase E. Look at this. Phase D right here, down, chopped around. And then right here, I said, look, this is probably going to break down, and we're going to have phase E and phase E, right? You're marked down. I've been talking about this exact move for over a month, and I've been talking about distribution now for at least 2 to 3 months. Nothing is a shock. Nothing should come as a surprise. I'm not saying that in a condescending tone. I'm saying that so that I can get through to you that these markets, they do leave breadcrumbs. And no, you never know for sure what's going to happen, but you should have had an idea that this was a possible scenario, especially because I was saying it was a possible scenario. We got a death cross back here. And one thing I said was, this was a fake death cross because real death crosses, the 200 is curling down and so is the 50. The 200 here was curling up and the 50 was going down. And so what happened was we had a huge buying around that area, the volume here, and that caused the pump. It ended up being a trap, a bear trap. Over here, we have another, pseudo death cross, but this one's a little bit different. Now, I did tell my Discord to watch this one, and if we start seeing a bunch of buying volumes, be on their toes because it could be a sign that this is getting ready to bounce. Not necessarily to bounce to 200,000 or anything, but basically to be careful of running into short positions type of thinking. But this bear cross is different from this one because this bear cross here, the 200 wasn't down, but it was almost flat. This is a more legitimate bear cross. And we did get some buying, a pretty decent amount of buying right here on this 18th candle. But then the selling is just overwhelming it and it's taking out that low. So it's not looking good for, that bounce. What I said all along, guys, was that this is a smaller distribution pattern. This pattern here, I was only looking for it to go back down to, maybe $75,000 to $80,000 range. Is kind of what I was looking for. By the way, that range also lines up with the 1.618 extension of this bear flag. Okay, because this is a bear flag here. It had a target of 93,000, and I was looking for it to hit the extension at the very least. But here's what I want to show you, and this is super important for you to understand. While this here is what I call a localized event, I was talking about the more macro stuff, which was this QQQ chart, right? Bitcoin versus QQQ. This is a relative strength chart. This very much looked like distribution on a larger level, and that I was concerned that this may actually head for the bottom of the channel. And again, we've just been steadily moving down, losing value versus tech stocks. And what that shows you is Bitcoin is relatively weak to the market. It's not just weak versus the US dollar, it's weak versus other tech stocks. Now, a lot of this is because money rotated out of cryptocurrency, and I said this many, many months ago, and into AI stocks. That became the new hot spot for people to chase gains. And that's what markets do. Markets, the money just sloshes around, people chase gains. It's like a shell game. They're always like, the market is always trying to pick which shell has the marble or the pearl underneath it, okay? It just moves around, and crypto lost its allure because AI stole its thunder. And that's the reason that we didn't get the same type of behavior that we got in past cycles where it just went straight up, 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 outperforming the QQQ because AI stocks did that instead. Okay, that's why this cycle looks different. But there's a critical thing to understand about Bitcoin that I have not seen a single person talking about. But a lot of these analysts, they're actually saying like this is a bullish dip and you should be buying Bitcoin and stuff. And when you look at their history, they don't have a great history. They're basically just a one-sided bull only, even during the worst drawdowns. And everyone's ignoring time. So you have to look at timing, okay? So if you go back in Bitcoin's history, this is a Coinbase chart, but I checked this on Bitstamp as well. Essentially, at no point in time has Bitcoin been worth less on a specific day than the year before on the same day, unless it was a bear market, or with one exception, the COVID crash of 2020. For about a week-long period, it broke this rule. Other than that, it's never been worth less a year later unless it was a bear market. Let me show you what I'm talking about. We're going to draw out 365 days, so we have 1 year. So what I'm saying is that if I put this on any candlestick at the beginning of this timeline, price should be lower than it is today. This is where price is today, around 86,000. And this is where price was a year ago, above that level. Again, that's never happened in Bitcoin's history except during bear markets and during COVID. So if we look at COVID, for just a super brief period that lasted literally hours, Bitcoin fell down to around $3,858, which was roughly equal with the price 1 year previous. And we're talking about this lasted for a couple of hours only. And then it shot right back up. So by the time that closed, it was up here, which was well above where price was a year earlier. You see what I'm saying? It was a very temporary inefficiency. But at any other time, we're not going to see this. We're going to see that price was always higher a year later. It may sound like I'm being bullish right now, but I'm not. Like even during the summer of 2021, when we had like a 50% pullback, watch this. Even at that low point right there in the center, price fell to about 28,000. A year earlier, price was down around 8,000. The only time this shifts is when the market shifts into a bear market. So for example, when it fell down to this level around 32,000, if you look back here, same thing. It was crossing below the previous year's lows. And what was that? Bear market, right? Had the bear flag and then more downside. Now it doesn't guarantee anything. Doesn't guarantee anything at all, but it is a very strong sign that this is not a dip, that this is actually the bear market. Bear markets in Bitcoin's history, as I've talked about in many different videos, a lot of people try to look at them as a straight up, it's going to drop 80 to 85% because that's what it did last time. They do something like this. Oh, look, it dropped 83%, 84%, so on and so forth. That's not really the right way to approach that. You want to use Fibonacci levels. That's what you want to do, right? Because there's a general rule in markets that they retrace 80% of the move, not 80% from the high, but 80% of the move. So for example, in the 2015 bull, 2017 bull, right? It fell down. Here's 80% level around $4,000. And, that's basically was a great buying opportunity here and it touched it over here. If you look at the next cycle, if you're waiting for 83% drop, you never got it. But if you were just waiting for a touch of the 80% Fibonacci level at 16.3, it was almost a perfect touch. Okay. So if we get a crash and if the top is in, at the bare minimum, me personally, I'm not saying what you should do, but me personally, I expect it to fall to at least 37,627. Depending on what the broader market is doing, I believe it's very possible it falls further than that, but it doesn't matter because this is 2025. We can reevaluate that if and when the time comes. For right now, this is my thought process, is that Bitcoin is likely headed, while not straight down, there'll be, bounces along the way and everything. My thought process right now is this has entered a bear market and is very likely going to move down toward these levels. I'm not telling you whether to buy or to sell. I'm not telling you anything like that. I'm just saying this is what I'm looking at when I see a chart. This is what I suspect will happen based on, 8.5 years of experience and how markets behave and technical analysis and stuff. I think there's a very high likelihood this is what we're going to see is sub $40,000 Bitcoin. Every time I've thought that the market was going to retrace to at least the 80% level, but every time I've said those things, I've always positioned it as, if you're, a bear, obviously it's easy to be happy. If you're a bull, you should be happy. If you're truly a long-term believer in Bitcoin, you should be happy because this would represent, a cheaper buying opportunity. I'm not saying you should buy it, but I'm saying if your belief is that within the next 10 years, Bitcoin will go to, for example, $1 million per Bitcoin. If If you have conviction in that, then you shouldn't be scared because Bitcoin drops to this level. If anything, then you could view it as a buying opportunity. Again, I'm not telling you to buy. I'm saying like mentally, why would you be upset about being able to buy something cheaper? Like if somebody came to me today and said, hey, the QQQ is going to crash to $100. I would not be upset by that. I would be super excited to buy shares of QQQ for $100 because I believe long-term it will be worth way more than $100. The only reason you would be worried about that is if you don't actually have conviction in Bitcoin and you're really just trading on hope, because then it scares you. And so if you are scared, you need to take note of that because maybe you're not as sure as you think you are. When people got upset with me for the calls for a drop to 3,500 to 4,200 way back in the summer of 2019, which then happened, in my post, I literally said, look, I think it'll drop, but then I think it's going to 52 to 75,000. And they still got mad at me because I was saying it was going to drop. But I never understood that because what I was telling people is like, here's my plan. I've sold everything. I'm going to wait for it to hit these numbers. I'm going to buy everything back with conviction. And I'm going to ride it to 52 to 75,000. I was looking to buy Bitcoin. I just wanted to buy it cheaper. And I was right. Back here, when people were saying the bottom was in, I was saying, look, I think it's going to drop to 3,200. Again, I was bullish long term, but I wanted to buy it cheaper. I was right. Back here, when I was in the 60,000s, people were saying it's going to 100, 200,000. I was saying, look, I think it's going to drop to 8 to 16,000 and most likely 8 to 12,000. I was sort of right. It fell to 15.4. I bought Bitcoin at just over 16,000, very small amount of Bitcoin down there. I've never understood why people got upset about getting something on sale. If you went to the store and your groceries were suddenly 50 or 60% off, you would be thrilled. But if somebody tells you that you're going to have an opportunity to buy Bitcoin at 50 to 60% off, or that you may have an opportunity, you're upset. That says a lot more about you than it does about me. You need to check that and make sure that you're trading logically, not emotionally. Do me a favor right now, please. Stop and give the video a thumbs up, subscribe to the channel, and leave me a comment letting me know your thoughts. Most importantly, remember that I'm some guy sitting in a spare bedroom, and that means that nothing in this video is financial advice. You should always go out and do your own due diligence and seek out professional financial advice from a licensed financial advisor before making any type of investment in cryptocurrency, the stock market, precious metals, forex, or any other tradable asset. Thanks for watching, and as always, please remember to trade safe.